or anybody else? Was it just him who was attending last week? Mm. Naledi, were you here last week? Naledi Umpile, were you guys here last week? Guys, are you able to hear me?
Yes, ma'am.
Yes, ma'am.
Okay, I'm asking what was the total that we got when we were calculating for net profit after tax? That's not gonna be a problem because you're not saying anything, guys. Okay, we are done with this part. Okay, so we're gonna move to 1.2.3 over there. They say complete the statement of financial position on 29 February 2024. And then some amounts have been entered in the answer book. Figures are not required in the shaded area. That doesn't really matter for us. And then they say show your workings. Basically, you must show how you got to your final answer, right? Now I'm gonna ask you by looking at extract A over here, which ones do you think are not gonna form part of um the statement of financial position by just looking at this records or balances at the end of the financial year? Guys,
Ma'am, may you please repeat that?
I'm asking by just looking at the extract A, which accounts do you think are not gonna form part of the statement of financial position?
Shareholders for dividends, uh, ordinary share dividends. Yeah, that's it, ma'am.
That's it. Anybody else? Mm, okay, cool. Somebody wanna say something? No. Okay, cool. So when you are completing statement of financial position, you're going to include your non-current assets, current assets, and then you're gonna include your equities, non-current liabilities, and also your current liabilities, right? And do you guys remember what we said is the difference between non-current and current, whether liabilities or assets? What is the difference between current and non-current? Let me try to check. Um, who's in here. So, Umpila, what is the difference between the current and non-current? Umpile, are you there? Now, lady, what is the difference?
Current are the assets that are used within 1 year, and then non-current, it's like it has a long term, like a lifespan.
Over 12 months. Did you say 12 months?
Yes.
Okay, I show speed. What's the difference? What do you think is the difference between non-current and current? Okay, Kim, let's hear you out.
Ma'am, non-current assets are assets that are used over 12 months, and then current assets are used within 12 months.
Okay. Okay, cool. Thank you, guys. Basically, the difference between current and non-current is that current, if it's liability, it has to be paid on, if it's an asset, that means it matures, can be used within 12 months. Once it's above or over 12 months, that is going to be considered as a non-current, okay? And I just forgot to send you the answer book that we're gonna use for this question. Let me try to check if I can. Wait now in a minute. Stop sharing. Because some of the amounts have been plugged there, so actually we don't need to actually figure them out. Let's see. Just let me know as soon as you have received it. And for those of you that have that don't have the answer book for this, you can also text me on WhatsApp just quickly, like a minute. I'm just gonna forward it to you. Kim, who else doesn't have it? Do you guys have the answer book? Kim, did you get it?
No, ma'am, I don't have.
Don't have. Did you text me on WhatsApp?
I'll text you, ma'am.
Okay. Yes, yes. I have received. Okay, did you all receive it? Those of you that tested me.
Ma'am, I just texted you.
I sent you. Didn't you receive it?
I just received it, ma'am. Thank you.
Cool. Guess everybody has it. Now we can continue. Let me share my screen back and we will start with this question. So this is it. So the top part, we're going to be working with assets and then equities and liabilities, right? As I said, we start with non-current assets. And the nice part is they've already put things there for us. And they said the green or the gray shaded area doesn't have to be uh, uh, completed, right? And that means you're gonna jump straight to current asset. We have inventories, and for inventories, we're going to check in the thing the adjustments if there's anything that has to do with inventory. So I'm just gonna zoom in here. So this is no longer important, but this is going to be important, and this one over here. Okay. So anything that has to do with inventory here. So according to the statement or the answer book, it says inventory is 1,350,000 and it's in here. It has brackets, so that means we may need to make adjustment to it, right? So we're just gonna go through the adjustments and let's see. So in the answer book, they just have this amount over here. They just have this amount over here. Let's see. Yes, 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 yes. No, done. They just have this amount over here. Do we have any adjustment that can help us to calculate for inventory?
Ma'am, information I.
Information I. EFG. Do you mean Roman figure 1?
Yes, ma'am. That's what I meant. Sorry.
Okay. Let's see. They say net profit before tax is that. Okay, cool. And they said the following stock sheet relates to AI generators. It was recorded twice when the final stock figures were calculated. Leave bonus of AI generators at a standard rate of 22,400 and 400 per unit. A markup of 40% on cost is applied. They say note, the specific identification valuation method is used. And then we have opening stock 1 March 2023 is 15 purchases during the year is 95. Closing stock 29 February 2024, we don't know. And the sales equates to 89,000 89 units. and the unit price is 22,400 rand, and the total sales is 1,993,600 rand over there. Does anybody know how we're gonna make use of this information over here?
Ma'am,
Hmm?
I think that we're gonna take opening stock of 15 and then add the purchases of 95 and then minus sales of 89, and then whatever we get will be the closing stock, and then we times it by 22,400 because that's the unit price, and then we're gonna get the value of the closing stock.
Mm. Okay. Does it make sense to everyone? Does it make sense to everyone?
No, ma'am.
No.
Yes.
Basically, to get the unit, the unit stock at the end of the period, which is 29 February 2024, you're going to take the opening balance of the unit, right? When we say balance now, we'll be referring to the units. You're gonna take the opening units and then plus the purchases minus the sales. Then you're gonna get what? You're gonna get the closing units that you are supposed to have, right? So let's start. We're gonna start with 15 plus 95 minus 89.
Ma'am,
Mm-hmm.
you get 21.
21 units. So that means at the of the financial period, everybody that we should have a value, or sorry, the units of 21 for stock, the AI generators left in the business. D- did everybody get 21?
Yes, ma'am. I got 21.
21, right? And let's see. So now that we have 21, uh 21 over here, it's the units that were left at the end, and now we're going to calculate for the price, right? The unit price is there. This is their selling price, okay, not the cost price. So they said they add 40% to what? To the cost price, okay? So you're gonna take the 22,400 rand. Remember, Kim, they said this is the standard rate, meaning that they sell it. This is the selling price. Sells AI at a standard price of this, okay? So we don't value stock at a selling price, but we value it at a cost price. Ne? So they said they add a markup of 40%. So that means the 22,400 rands has a 40% in it, right? So that means, let me write over here. Okay, so that means everyone, um, we have what? We have 140% is equal to the 100, which is the cost, 100% plus the 40%, which is what? Which is their markup, okay? So we have what? We have 22,400 rand being what? being our 100% plus 40% being the sales, right? Remember, this is selling price, cost price, and markup, okay? Then we do not, if we have the value of selling price, we can easily calculate for this or for that, all right? So how we gonna do it? We're gonna take the selling price and then we multiply it by, if we wanna know the 100%, which is the cost price, we're going to take the 22,400 rands and then we multiply it with 100 and then we divide it by what this amount over here represent, okay? So because this amount over here represent 140%, this is how we're gonna do it. So we're gonna say 22,400 multiplied by 100 divided by, this is what, this is 140, okay, divided by 140. Then we're going to get a cost price, okay. How much is it?
16,000.
16,000.
16,000.
16,000. So that means the cost price is 16,000, okay. Is that clear to everyone? Any question? We're all good. Mm-hmm.
Are we doing this because of the GOP principle of historical cost?
No, we are doing this because this is the cost price, not we're not going to use the selling price. Remember, I said we are valuing it. Actually, we are valuing our stock at cost, not at selling price.
Okay, ma'am.
Yes, so selling price is only used because we are selling and we want to make profit. That's why we add more value to it so we can make the profit that we want to achieve, right?
Yes.
Yes, yes, yes. And let's see. Um, Now that we have um this over here, and then you guys said we have 21 units, so we're gonna multiply with the 21 units, and how much do we get?
336,000.
336,000. 336,000. Now let's reflect back to the statement over here. They said the following stock sheet relates to AI generators and it was recorded twice. It was recorded twice when the final stock figures were calculated. Are we going to add it or are we going to subtract it?
Subtracted.
Why are we subtracting it?
Because we have double, ma'am. So we have to subtract it. So we have just the one figure that we need.
336,000. So yes, guys, we're going to subtract it because it was there two times. It's like we said when we were calculating, we said plus 336,000 plus 336 thousand, and then now to get rid of this one, we will now minus 336,123. Does it make sense to everyone?
Yes, ma'am.
Okay. Anything else that has to do with stock? Share capital, income tax, the fixed deposit, unused consumables, stores amounted to. Mm. Do you guys see that? This will go to our inventories. Remember when we are preparing the consumables, sorry, when we are preparing the note, the inventories note, we also include inventories and consumables on hand, right? So this will form part of the inventories. So that means we're going to have to add it because it was not used in the current financial year. So we have to now add it. So we're going to add the 5,320. So we're going to go to our answer book. Where is it? Over here. And then we're going to get plus uh plus, is it 5,320 or 5,230? Okay, I think 20 like that. And then I think we are done. Or do you guys see anything? If we are done, then we can add all of these together. The 1,000, we can sum it up. The 1,350 minus, yes, 1,350,000 minus 336 plus 5,320. And let's see how much you guys are getting. How much are you getting?
1,019,320.
1,019,000.
No, ma'am, like 1,019,019, yeah, 320.
1,090. Is that what everybody's getting? I show speed. Are you good there? Okay. Okay, no problem. So that means this is our um inventories. Now let's go to our trade and other receivables. And for trade and other receivables, we have 889,500. Then now we're gonna check what is it that affects our trade and other receivables. So your trade and other receivables would be your um prepaid expenses, right? Prepaid expenses and what else? What else affect the note?
Ma'am,
Mm-hmm.
does accrued income also included in this parent receivables?
Yes, yes, it does. Yes, yes, yes. Because accrued income, you provided the services as a company, but you haven't received the money for the service that you have provided, right?
Yes, ma'am.
So we're gonna check here. Do we have anything that has to do with accrued income or prepaid expenses?
I think I think we have prepaid expense, ma'am.
Where?
VI in VI. IV,
Okay.
ma'am.
Insurance include an annual premium of 21,540 paid on 1 December 2023. Okay. What is the first thing that we're gonna do? Um, the accrued fall under the accrued.
Ma'am,
How are we gonna go about this?
it's a prepaid expense.
Yes. Which part of the amount is prepaid expense?
21,540.
The whole amount.
Yes.
Okay, cool. So the whole amount is not gonna be a prepaid expense. So what you're gonna do, because they're saying it's annual, you can mute your mic.
Okay, ma'am.
Because they said this is an annual expense. It's annual premium. Okay, so that means the 21,000 that you're seeing over here is what is for the entire 12 months, right? 12 months starting from 1 December 2023. So you're going to divide the whole amount with 12 because we want to know how much is the monthly premium. You want to know how much was supposed to be paid per month for the insurance. Okay. Then let's see, 21,000 540 divided by 12. How much do you guys get?
1,795. 95.
1,795.
795.
1,795. Everybody's getting the same amount. Okay, good. And that means per month, this is the amount that was supposed to be paid. Now you're going to calculate or count how many months do we have that we have paid that or that the company has paid with regards to the current financial year, and how many months have they paid that is not for the current financial year, and then that amount that is not for the current financial year will be regarded as the prepaid expense because we paid before we could get the services, right? And this should be easy for you guys if you remember or you were taking notes when we were doing the first part of the lesson the other time, which is completing the net profit before tax, because you're just going to take the amount that you got there when you were calculating for what you call what do you call for insurance, right? Remember when we were doing insurance in the income statement or statement of incomprehensive, oh, statement of comprehensive income, we were subtracting the amount that does not belong into the current financial year. So that amount that we subtracted there would be the very same amount we plug to the statement of financial position. All right. And how much is it? So we're going to say we have what? We have December, January, February. So that means 3 months belong to the current financial year, and then that means 9 months does not belong. So you're going to take the 1,700 and that you multiplied by 9, and then you're gonna get the amount that should be put as a prepaid expense.
Ma'am, I got 16,155.
16,000.
155.
Everybody getting the same amount?
Yes, ma'am.
16,000 and that 16,155 you said. So we're going to add our 16,155. And when we are looking here, do we have any other thing? Let's see. Any other thing?
Mina, ma'am, I don't see anything for now.
You don't see anything. Anybody else? Okay, do you guys see this one over here?
The one that starts with debtors.
Yes.
Which one, ma'am?
That one. Whenever you see, mute your mic. Whenever you see that has to do your data with your debtors and you're completing a trade and other receivables, just know that there's a high chance of that being part of the trade and other receivables. Because remember, for trade and other receivables, we work with debtors, and then for trade and other payables, it's creditors, right? So in this case, they're saying what? They're saying um debtors with a credit balance of must be transferred to creditors ledger. Provision for bad debts must be adjusted to 4% of debtors. So they're saying a debtors with credit balance. Let's see. What do they mean by that? Do you guys know what they mean by that? Um, this is account of a debtor. Mm, a debtor, and this is debit and this is credit. Okay, and they said this data has a balance of a credit, right? Did they say that balance? So it's 12,000 350. I'm not really sure about the balance. So that means remember, a debtor's account is a what? A debtor's account is an asset account. So that means it increases on the debit and decreases on the credit. So that means each and every time um we are gaining a debtor, that means we're going to we're going to debit it, right? So in this case, the balance is credited. Do you see that? So that means um we are actually owing this data. Do you see that? Guys, do you see that? Hello.
Yes, ma'am.
Yes, ma'am.
Okay. Usually, in case you didn't know or you forgot, a debtor's balance should be this side. All right. Let's say now this 12,350. A debtor should be like this. Okay. Usually a debtor should be like this. And then every time when they pay, um this is bank. This is our bank. Every time they pay, remember, plus minus. A bank is an asset account. Okay, it can be an asset if it's positive. But in this case, um, the balance should be a debit. And whenever they pay, we're going to write in the side, which is decreasing whatever the amount they're paying. Let's say this person paid 350. So now that means we're going to say now it's what? It's 12,350 minus the 350, so it's going to be 12,000 and then 12,000. Balance carried forward, it's going to be 12,000, and now the new balance is going to be 12,000. So but then remember we credited this, so that means when they're paying, this money is coming into our bank account, which is 350. But in this case, this data over here has a credit balance, which means that we owe this person. Now this person should now be considered as a creditor. We are owing this person, not the other way around. They should be transferred to or changed to the creditors, not the debtors anymore. Do you guys get it?
Can you please repeat, ma'am?
Which part did you not get?
The debtors, the creditors balance.
So I am saying that the statement over there says a debtor with a credit balance, which means we owe this person because a debtor should have a debit balance, right? The moment they have a credit balance, that means we owe them. We as the business owe that person. For example, that is maybe, let's say for example, a customer comes to our store and they buy goods from us, and then they later come and pay. When they're paying, they pay more than they were supposed to. Maybe let's say for example, they were supposed to pay a total of 4,000, but they paid uh, 8,000 instead, right? So now you see, they they were owing 4,000, but they paid 8,000. So you're gonna say 8,000 minus 4,000, which is going to be 4,000. So that means they paid 4,000 more, right? And they don't owe us this 4,000. So that means they have what? They have a credit balance. Now the balance is not going to be debit, it's going to be credit. They don't owe us, but we owe them. When we owe them, is going to be credited, and when the debtor's balance is credited, they have to be changed to or switched to creditors because we owe them, not they owe us.
Yes, ma'am, I understand.
Yes, everybody else understand it? Him, do you get it?
Yes, ma'am.
Was that you, Naledi?
It was
Yes,
me,
that
ma'am.
was all.
Naledi,
Ma'am.
did you get?
Yes, ma'am.
Okay, good. Good, 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 good. And now we're going to minus it because we have the thing, we have it in here. We have it in here, 89,000. We were saying we have it here, so we have to subtract it with from here. So we're going to have, is it 20? How much is it? 12,000. Or is it 12,350? Mm-hmm. 12,050. And then provision for bad debts must be adjusted or should be adjusted to 4% of debtors. 4% of debtors. So that means we have to recalculate the new provision for bad debts. Remember, when we are doing the note, we start with our debtors less provision for bad debts, right? And that means you're going to take the total, which is 889,500 minus the 12,350 multiplied by 4%. So it's going to be this amount over here minus 12,350 multiplied by 4%. How much are we getting?
It's 889,000, ma'am.
800. Uh-huh. 800.
That's the answer. I'm asking what is the figure on top. Yeah, now I can see it. It's 889,500 minus 12,315 times 4%. Okay. Ma'am, I got 35,086.
35,086.
Yes, ma'am.
Okay. So that is, we're going to minus it because it's 35,086. And you sum the whole, and how much do we get? 88,500 plus that minus the 1, 2, 3 minus 3, 5.
889,500 minus 12,315 minus 35,008. What? At 8,9,500 minus 12,350 minus 35,008. Ma'am, is that 86? Is that 35,086? Or is it 850? I mean 35,008 what? The last figure.
086. You said 35,086. Didn't you say that?
I think so, ma'am. I'm not sure.
Yes. So you add everything together to get your trade and other receivable balance. How much did you get? I'm still waiting for you.
Oh, ma'am, I said I got 858, 219.
800 and
58.
Is it Miss Lit?
let's see. Oh, nice. Let's finish. Continue with it. Like next week. So
Okay, ma'am.
858,
219.
219. Okay, cool, guys. Uh, just continue with the total asset next week. Just make sure you take screenshot of this so we don't forget the balances that we have. Everybody got a screenshot for the balances?
Yes, ma'am.
Nice. I'll see you guys next week. Bye. Enjoy the rest of your week at school. Bye, guys. Let's see. Um, Good evening, guys. I'm sorry I lost track of time. Are you all good? I see Nomta and Spider. Let me stop this. Are you all good?